Hey there, welcome to the show. It is Sunday night, August 27th, 2023, the last full week of the month of August. Man, has this month flown by. State fair, back to school, vacations, everything seems to happen in the month of August, and it feels like a shorter month than February. So here we go this week. We are over 3,000 listings on the market right now. Total 3,033 was the high today. We were a little bit higher, I think one or two higher than that yesterday, which is kind of a cool number to see. We're going to talk a little bit about maybe why that's happening this week. We alluded to it last week. Also, down here at the bottom, you see that the all homes category. So when you average all the existing homes and condos and new homes and new condos, we are right at 3 months of inventory. We've been hovering around that. It's been off and on here the last 2 or 3 weeks, but this week we ended the week at 3.0 months of inventory. That means right now our account shows that we are kind of in an even or a balanced inventory market, meaning that the overall buyers are having about the same benefit as sellers as far as finding homes. Still, when you get to resale properties or existing home sales, it's still out of balance there. We're at 1.9 months, but overall 3.0 months of inventory overall is a pretty good number. And a lot of that's driven up because of the high numbers of inventory for new construction homes, 7.5 months and 9.5 months. That still makes that into a deep, deep buyer's market. So again, always the second slide in this week's show. This is just basically the same information, just condensed a little bit and put in pie charts and bar graphics there. So the topic this week we're going to talk about is 3 topics. It's going to be a fairly quick show, I hope. We're going to talk about bombs, inventory, and interest rates, and sale prices, the new versus existing, and how that came about to be on the show. So we're going to start off, first of all, with back on the markets. And you can see that the last 8 weeks, we've had 3 weeks where we have been extremely high percentage of homes coming back on the market. Last week we were at 37 or 36 or 37, I think it was 37% last week of home sales came back on the market, and the week prior to that was just over 30%. You know, the average year to date is 23%. So we are trending a little higher than normal this year. And that's not to be, unexpected with the rise in mortgage interest rates. We've got a lot of buyers that are out there a little bit more skittish. Is that a new word? Put it in the book. Skittish. And, we're about a third of our year we've been over the average so far. So, do I expect this to continue? I think I do, actually. I think we're going to see, as we get closer to the end of the year, we're going to start to see more homes coming back on the market. But I just thought that was an interesting graphic to look at. We haven't talked about back on markets lately. The second topic here is inventory and rates. This is one we're going to revisit from last week, only because the Fed raised the prime lending rate last week, and that particular rate went up, caused the 30-year fixed rate average mortgage across the United States to go up to 7.23%. And that's the highest rate we've seen in our marketplace since 2001. So, 22 years ago was the last time we saw a rate this high. And if you recall, last week we talked about how inventory follows rates, and that's starting to do that. We were 3,033 homes on the market as of today. You have to go back to November of last year where we just barely beat that, and then you have to go all the way back. In fact, here's you got to go all the way back into 2020 when we had over 3,000 homes on the market, and pretty consistently prior to that. So as rates go up, I think we're going to start to see more homes staying on the market, again, just because we're not going to have maybe as many buyers right now wanting to jump in an uncertain economy with what's going to happen with mortgage rates. Are we done raising rates? I don't know. I mean, I would like to think so, but boy, the Fed chair didn't sound too optimistic last Friday when he spoke to the country, talking about the future of potential more rate increases for the Fed. So just sit back and ride this roller coaster. That's all we can do, and stay positive. There is always opportunities in every market. Buyers buy and sellers sell, regardless of the rates, regardless of the inventory. So get out there, keep your heads down. The last part of the show this week came from a question. Matt Riggins texted me and says that he saw this graphic yesterday, and he wondered how close the gap is in Des Moines. It's closing in. And this comes from the Kobasi letter. It's a national report that looks at economic information across the United States, and they have wherever they get their data from. And I was trying to figure this out. I mean, obviously they're the source, but looking at where this graphic may have come from, they're showing that the median new sale price versus the existing home sale price is almost back to even again. In fact, they went into details in their report saying that home sales fell 2.2% in July, putting existing home sales down 16.6% over last year. Now, that may be true in some parts of the country, but what I always say about Iowa, we kind of march to our own beat of our own drums, and just to kind of prove this, I sent Matt back a quick graphic that I put together, and I looked at the new home versus existing home median sale price. And while it's true, it looks like it might be downward trending just a little bit over here until maybe the last 60 days where it kind of rose up again. But we are not coming anywhere close to being equal to the new home sale, or the existing home sale price right now. So new home sale prices are still about $125,000 above where, a little over that, above where we are selling the existing homes. And if you were to go so far as to look at the same numbers when you look at just the existing condo townhome median sale price versus the new condo townhome sale prices, there's still about exactly today, an exact $100,000 difference in those prices. So, that just goes to prove that, we are unique. We are our own market. I was in Las Vegas here earlier this month at the Inman Connect conference, and I sat down across from a gentleman from Berkeley, California, and we were having a great conversation. He was talking about how the price of homes out there just literally priced them out of the market, and talking about how many millions of dollars it takes to just buy something that's decent in that particular market. And so of course I had to tell him that we have very few homes of our 33,000 homes on the market. There's maybe about 30 or 35 homes on the market right now, if I remember right. I didn't double check it, but I think it's around 30 to 35 homes over $1 million. So of course, what did I do? I fired up the iPad and pulled up the MLS and showed him what he would get here in Iowa for $1 million. And man, was he blown away. I just don't think a lot of the country understands what the opportunities we have here in the central Iowa real estate market. Homes in this, the homes he was showing me for $1 million, or telling me about for $1 million, were basically what we're selling right now for $300,000 to $400,000 in our marketplace. So if you're talking to out-of-state buyers right now that are considering moving to Iowa for cost of living expenses, housing alone is going to be about 2/3 of what it is somewhere else in some of those really crazy markets. So anyway, that's kind of the show this week. Really quick down, and we're at 9 minutes. What a deal. Next week is end of month. We'll be doing the full end of month show for the month of August next weekend. So be sure and mark your calendars. And, if you find this content of value and you're getting something from it, that's fantastic. That's what I always want to hear. So the best way you can tell me that you like what you're seeing is to subscribe to the channel, and also either leave a comment or hit that thumbs up button, that like button, because that tells the algorithm that I'm doing what I'm supposed to be doing here, and you guys are looking at the data as important and helpful to you in your business. So with that, we will see you all again next Sunday. This is Les Sulgrove with Simply Des Moines Stats. You get all the graphics and the downloads each week at DesMoinesMarketValues.com, as well as a replay of this video is where that stays. So we'll talk to you all again next week. Thanks for joining me.